So let me tell you something that might actually surprise you. Most beginners don't lose money because they can't read the charts. They lose money because they don't understand what they're actually trading. If currency pairs feel confusing, random and overwhelming, this video is for you. And by the end of it, you'll understand why Forex is always relative and why this one concept makes everything else easier. But who am I? So my name's Callum West. I currently trade with different funded accounts. So I've passed multiple 1 and 2 stage verifications with prop firms. I'm actually receiving payouts from them, and currently in a Forex trading community where we have over 3,100 members in there. And yesterday alone, we hit over 9,000 pips in profit alone. So in Forex, currencies are always traded in pairs. You never buy just a currency. You always exchange one currency for another. Why? Because the currency by itself has literally no value whatsoever. A US dollar doesn't mean anything on its own. Its value only exists when you compare it to something else. Think about it like temperature. Saying it's hot doesn't mean much necessarily. You need a comparison. Hotter than what? Currencies work the same way. That's why when we trade pairs like euro to the US dollar, instead of just euro US dollar tells us how many US dollars it takes to buy €1. So when you see price on your random charts, the price is not just random, it's a comparison. One of the best ways to understand currency pairs is to think of it like a scale. On one side of the scale is one currency, on the other side of the scale is another currency. So when one gets stronger, the other must get weaker. Both currencies can't win at the same time. So on this chart, right, you see in front of you right now, this is euro US dollar. So the euro is gaining strength, the US dollar is losing strength. That's why it's going up, and vice versa. This is why Forex is called zero-sum market. For every buyer, there must be a seller with that. This perspective alone eliminates a lot of beginner confusion. So not all currency pairs behave the same. They don't move the same, they don't cost the same, they don't trade the same, and they don't carry the same risk. So let's break them down. Major pairs. Now, major pairs are the most traded currency pairs in the world. They usually involve the US dollar, strong economies, and high liquidity. A couple of examples are your euro to the US dollar, Great British pound to the US dollar to the Japanese yen. Because these pairs are traded so much, they tend to have lower spreads, smoother price movement, and more reliable behaviour. This is why most professional traders spend most of the time trading major pairs rather than your minor pairs. Beginners are often attracted to fast moving pairs. They think if price moves more, I'll make more money. But that's not how trading works. Fast movement without liquidity leads to slippage, bigger losses, and poor trade execution. Liquidity means there are enough buyers and sellers to keep price movement smooth. High liquidity doesn't remove risk, it reduces chaos. This is why boring pairs often produce the best long-term results. So if you are new to trading, your job is not to trade everything. Your job is to reduce variables. This means trading fewer pairs, trade familiar pairs, and learn how they behave. Most beginners do the opposite. They jump on from pair to pair, chasing movements, which creates confusion and inconsistency with your trading. If you want to improve faster, do this. So pick 1 or 2 major pairs and learn them deeply. Watch how they move, watch how they react to the news, and watch how they behave during different sessions. Different pairs move differently, some trend smoothly, some range more, some spike aggressively during news. So if you don't understand the personality of a pair, you'll think the strategy is broken, when really your expectations are just wrong. Forex is not about finding the best pair, it's about finding the pair that fits your personality, your schedule, and your risk tolerance. So this was day 2 of the 90-day beginner Forex roadmap, where we're basically explaining what currency pairs are. So if this helped clear confusion, make sure you do follow on with the series. And in day 3, I'm breaking down the base and the quote currency. And this is where most people kind of get that sort of aha moment with it. And if you do want to copy the exact signals what I've used to personally grow my account with, the link will be in the description. So let me tell you